The car market is a dumpster fire, the inevitable collapse of crypto, and the retirement crisis. Today, I read an interesting article on CNBC.com written by Dylan Butts titled Toyota Motor Posts Nearly 28% Drop in Third Quarter Operating Profit, Missing Estimates. According to the author, the world's largest automaker by sales volume saw a nearly 28% year-on-year drop in operating profit during the quarter ended December. The results mark Toyota's second consecutive year-over-year decline in operating profit after the company saw profit fall 20% year-over-year in the previous quarter. Here are my thoughts. I hate to hear about the financial woes over at Toyota. I truly believe the auto market could get pretty bad in the future. New vehicles are too expensive compared to what everyday Americans are earning. Many people are struggling with the higher cost of living, and they can't even begin to think about buying a new car. To make matters worse, a lot of people are buried in their current cars. Many bought near the peak of the market and paid over MSRP. They are in a negative equity position, and it will make it more difficult to trade it in on a new car. Sure, they might be able to roll over that negative equity to the loan for a new car if they have good credit and their debt-to-credit ratio isn't messed up. But the payment might be huge in this higher interest rate environment. I think Toyota should get some of their franchise owners under control. They need to put a stop to the crazy high dock fees and put a stop to the dealer add-ons that are being required. Some of these dealerships are adding paint protection and charging close to $1,000 for it, or even more in some cases. A friend of mine told me this can cost as little as $30 to install. Some dealerships put this on all their cars and tell customers it's already been installed and they can't take it off, so you need to pay for it. Of course, they will tell you it protects the paint on your expensive new car, so it's a good investment. Then there's undercoating and key protection programs in case you lose your expensive smart keys. I've also seen dealers install theft protection systems that they refuse to remove. All of these things are marked up by the dealer so they can make extra profit. The problem is, people buy these cars and leave the lot with a huge vehicle loan at a high interest rate, and they will often be in a terrible negative equity situation right from the get-go. I don't know what people are supposed to do other than call around and find a dealership that isn't involved with all of these dealer add-ons. There are dealerships out there who aren't involved with this. I would also ask what their dock fee is, along with any additional fees that they might charge before you waste your time and gas money going to their lot. What do you think about all this? Share your thoughts in the comment section below. I read another interesting article today. This one was on Yahoo Finance, put out by Fortune and written by Paola Cafino, titled, Activist investor Elliott Management says crypto is facing an inevitable collapse after its perceived proximity to the White House inflated a bubble. According to the author, famed activist investor Elliott Management sent investors a letter warning of a possible crypto bubble fueled in part by President Donald Trump having promoted the technology. In the letter, investors were cautioned about the inevitable collapse of the crypto bubble that could wreak havoc in ways we cannot yet anticipate. Here are my thoughts. This is a controversial subject. There are people that believe cryptocurrency is the future because it is superior to fiat currency such as the US dollar. Many believe it is like digital gold. Others believe it will be a safe haven if a currency collapse ever happens. Then, there are people who believe this is nothing more than a tulip mania. I'm curious, what side of the fence are you on? Share your thoughts in the comment section below. Now, I read some of the comments beneath this article. I'll share some of them with you. The first commenter said, wait, you mean a giant pyramid scheme could collapse without notice and leave a whole bunch of newbie millionaires broke? Who could have known? The next commenter said, I'm not an investor, I'm just poor. If I was an investor, I can't see myself investing in something that has no value. A better investment might be a card table in Vegas. You at least have a chance to win. Why would people spend their money on something that has no value? Unless, of course, it's all just a big scam. Another commenter said, Trump has been sold on the crypto opportunity to score the ultimate grift. Musk is coming down hard on leaders in the major European economies because they clearly and firmly reject cryptocurrencies as a gimmick, fraud, and fake. It is important that a high-profile group, such as Elliott Management, is being forthright about the likely collapse in value, likely even in the face of danger from the grifters in the White House. The last comment that I'll share with you came from someone who said, there is a tendency for writers and media sources to dramatize every larger up or down movement crypto makes. But Bitcoin, as an example of the largest coin, has had swings that went up or down since its inception. Over the long term, it continues to rise. And considering the ever-inflationary dollar and other fiat currencies that can be printed, that is likely to continue. Well, my friends, these commenters always have interesting things to say. Please always keep in mind, these are the thoughts of the commenters, not me. I read another interesting article today. This one was on CNBC.com, written by Alex Herring, titled, Why More Retirement Age Americans Keep Working? The author said, workers ages 65 and older accounted for 7% of the total workforce in 2025, which is up from around 5.7% a decade ago. My friends, this right here is interesting information. I expect this trend is going to continue. The author went on to say, the transition in the private sector from employer-funded pensions to 401ks created a need for many workers to remain employed longer, and the Social Security reforms in the 1980s pushed the program's full retirement age from 65 to 67. Here are my thoughts. We are starting to see how the grand experiment with 401ks as a replacement to traditional pensions is working out. For those who were good about investing throughout their working careers, the 401k was a blessing. For others who never participated in one or barely contributed anything, they may be in for a rude awakening when they reach retirement age. Some will have no choice but to continue working for as long as they possibly can. This is the reality that we live in here in America. I see articles all the time about younger generations who can't afford to buy a home, or about younger generations who are putting off starting a family because of the high cost of living. Others are unemployed and dealing with student loan debt. Unfortunately, these people are often not contributing to a 401k at a young age when it is important to do so. They will have fewer years for the returns to compound. I don't think the future is going to be bright here in America for many people who reach retirement age. But what do I know? I'm just some guy on YouTube with a gong. What do you think about all this? Share your thoughts in the comment section below. If you enjoyed this video, consider subscribing to the channel. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. If you would like to become a channel member, there is a link in the description beneath this video. You can read more about the different membership levels. Please also check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.